All right, well, welcome to the Momentum Trading Plan class. Really the objective of this is just to give you some framework as you go through your trading plan and as you're preparing to go to your live trading. Just kind of gives you an idea of what exactly your overall agenda is going to be and what your outlook is. And the very first portion of this section really is just trying to get an idea of why you want to be a trader. And we give you some examples of some things that you can put in there, but again, we want you to personalize this to you. So, why do you want to become a trader? So this is kind of your why of what you're looking to really accomplish here. And really the main objective is to just really kind of get to the root of what trading means to you and why there's, value for yourself. So what your primary objective is to, in this case, the example is to earn consistent weekly income, to build your trading business, maybe an opportunity. Another thing that you're going to see when you're going through your whole trading perspective is risk management is going to be key, and minimizing those overall losses. And that's a lot of what you'll put down here, where you've got your primary objective for accomplishing this is in this way is to basically provide for your family or that kind of thing. Obviously, that's why we're doing this, right? We all want to make some money. So this just kind of gives you a basic outline of what you're able to do, what your trading styles are. In this case, we recommend one broad market and possibly one commodity, so the ES as well as oil or the NASDAQ or something like that kind of fits your trading style. Just you guys should have a pretty good idea, in being in the trading room, kind of how they move and what the overall volatility is of each of one of those. Why have you chosen that style? What does it mean to you? Why did you choose those particular instruments? What was the value in there outside of just what you've seen with us? The strengths and weaknesses section, one great thing that you can do, and I do this quite a bit, is I'll put in kind of my strengths and weaknesses. I put in there my weaknesses and my limiting beliefs, because I think it's crucial for you to really kind of identify specific areas that you feel that you're being held back. And what I do is I have cue cards that I'll write down what my current limiting beliefs are in my mind. The first key to anything as it relates to weaknesses is just identification of being aware that there's a weakness. Now, these don't necessarily have to be just strictly from a perspective of from trading. It could be a belief that you've had, like I put here, that the belief that money is the root of all evil. Sometimes people think as money is, I'd rather be the happiest I've ever been when I've been broke, or whatever the mindset is. You want to make sure that you can identify what some of those limiting beliefs are. And also, too, just kind of getting an emotional gauge of how you currently feel about your life right now. And again, this document's going to change over time, because your beliefs and a lot of your mindset will change as you evolve as a trader. If you're making nothing now as it relates to trading, and you start making 3 to 5 or 10 grand a month, how's that going to influence? Obviously, it's going to change kind of your perspective on how you feel about yourself and that sort of thing. But it's really important for you to get a real good gauge emotionally of where you currently are, and identifying your strengths and weaknesses is going to be part of that whole process. And as we get later into the actual trading portion of this, there's not going to be as much about feeling. It's going to be more about structured rules and kind of what your disciplines are going to be, to really kind of help minimize some of those limiting beliefs, that kind of thing. Now, what we actually follow what I call the 4T method, 4Ts of trading. And this is something that I've actually developed. So this isn't something that you're going to be able to go Google and find more information on or anything like that. So tradable instrument, really the idea behind what tradable instruments going after, or what particular instruments, like we discussed earlier, are you going to focus on trading? Is it going to be S&P, NASDAQ, Russell, Dow, crude, gold, some of those other Forex ones like we've discussed? And really, it's worth your time to be able to go through and just kind of feel for all of the instruments and which ones actually make sense and what you like. And of course, we've got kind of a sample description down here of just some basic good money management or good rules or that kind of thing, but you really do need to make it your own. So as it relates to the technical setup portion, we follow what's called the spots method. Spots method is something that, again, we've internally developed, and what we're really trying to look at is really what's the overall structure of the market. What's the carry trade doing? What's the NASDAQ, S&P, Dow, Russell, VIX, other markets, get an idea of relative strength. You know, how's crude interacting with the S&P, those types of things. Then we have our own predictive oscillators, which you guys see in the trading room are going to be the linear regression lines, as well as some additional stuff that we look at as it relates to some of our proprietary indicators. But we're really just trying to get an idea of where are going to be key areas that are going to be looking for potential entries. And we kind of rank those. +1, -1 is kind of the overall theme with that. You know, if you're at a bottom band and you're getting a turn buy at an arrow, that's going to be a +1 versus a -1. If you've got gold versus red, that's going to be neutral, some of those types of things. Overvalued and undervalued, really the main objective of the overvalued and undervalued is just identifying support and resistance on a chart. Is, you know, based on the current structure, are we at a low or are we at a high? Where are we as it relates to our undervalued scenarios? Technical studies really is going to be a lot of our indicators, right? So if we've got, you know, MACD or stochastics or whatever indicators you may potentially like, that's going to be a lot of those technical studies. I know some of you guys are kind of dabbling with those. Bollinger Bands, are we pretty extended one direction or another? And we kind of go there. And then systems is taking all of those things into consideration and anticipating how you're going to physically build a trade around that whole setup. Now, the daily routine portion, what we've done is I've got an example here of what a basic daily routine could look like throughout the course of a day. Now, it's your job to fill in this top portion and kind of identify what you're going to do first, what time you're going to get up, that sort of thing. Because I know some of you guys have, you know, are running kids around possibly or have other errands or maybe a full-time job. So your time frames may be a little bit different. You know, I know we've got some students that get up fairly early, even earlier than 5:30, but this just is a really good idea of really what you're wanting to focus on. And just some examples of this is, you know, at 5:30, wake up, have a good breakfast. You know, again, we're going to focus on how you're feeling and how your mind is, make sure that you're not sluggish. I always recommend some type of light exercise at this point. Now, the purpose of light exercise isn't where you go to the gym for an hour and, you know, push some serious, you know, weight around or you're out doing that type of thing. Light exercise could be just sit-ups, push-ups. Maybe you go for a you know, 10 or 15-minute walk around the block just to kind of get some blood flowing. Really just want to wake your body up so you're not coming into this with any being tired or anything like that. So trading pre-market, again, you want to kind of get a feel for how the market's looking and what the overall objective is. Again, we've got our current market open at 6:30, so this is more based on Pacific time. So a lot of this can adjust relative to that. Looking for trade setups, that types of stuff, getting a good feel for the overall markets. You know, after about an hour a day or so, just keep yourself, you know, after about 2 hours after the market, just go enjoy the rest of your day. There's really not anything that's worth watching the markets throughout the course of the day. You know, this is where I actually, and myself and Dave actually will go work out. It's kind of in this time frame, and then we'll come back and look for potential setups later in the day. Have your wrap-up call, kind of review your trade plan, make some adjustments, and then make sure you're getting a good night's sleep. So very important for you. Now, the trigger, what the idea with this is just like a gun. The whole purpose of a trigger is just to induce action, okay? So when you're entering a trade, you want to look at your risk to reward ratio. You want to identify your spots. You want to identify what points, that types of stuff, how you're going to manage that. But really the idea is what is going to be the actual instrument or what's going to be the actual process that's going to induce action as it relates to my trading. That's really the idea. The final section here, really, in this whole method, is the trade management piece, and we call it CRISP, or Comprehensive Risk Management Systems Protocol. Is how am I actually going to manage these trades as I come into this? So my trading plan, we'll have 3 types of stops to manage my trades effectively, and we're going to talk a little bit about those. Really, the idea of these 3 separate setups is going to be your initial stop order, which is, when you get into a trade, it's a hard value, you're willing to risk 2 to 5 points, whatever that dollar amount is. A time-based stop, really, again, this is going to be based on duration risk, how long I'm in a particular trade. Do I still want to stay in this particular trade, or that type of thing? And then the final one is going to be more of a technical style stop. So this is going to be something that you're looking at indicators, or you're looking at whatever systems you're running. If you got a gold arrow or, something like that, that would be an indicator of kind of like a technical stop there. This also talks about your trading system, that type of thing, as far as computers and what you're actually running. Obviously, as you grow this may get much bigger, but normally you like to have a system where you've got 2 monitors that you're able to monitor your trade. So if you're on a laptop, I would encourage you to possibly look at getting an additional monitor or 2 monitors that you can plug into your laptop and run simultaneously. That's going to be kind of crucial as it relates to this whole process, just because you want to make sure that you're able to see that. Now, coming into this, these are just some basic guidelines for stops, like we discussed earlier, how to adjust stops, focusing on good risk to reward, which we're going to talk about in additional training. And the final portion of this whole thing are targets. What are my actual targets on getting out of trades? So the first thing, you can have a goal. Let's say your goal is $500 a day. That's going to be an initial goal. So once you get to that goal, then that's going to be determined based on the number of contracts that you're trading. So, if you're doing the S&P and you're looking for 2 points, then that tells you how many contracts or how many trades you're going to have to do per day. But you can see how that number grows from a weekly to a monthly scale as well. This number needs to be changed to 2,500 there. So you can see how that number grows pretty aggressively. Normally, we like to tell everybody, especially when you're starting your combine, shoot down into this like 200 to 100 a day. That's going to be kind of a good goal for you, especially in the beginning. And then as you get better at this, then you're going to be able to, obviously get much higher rates of return as you've built some capital there. So final thing, I always encourage a direction statement. Now, a direction statement really is kind of the idea of putting all of what you're going over into perspective and getting your state of mind and getting focused and motivated for success. Normally, I like to do this at the end because you have a pretty good feel for what exactly you're looking for, but this gives you an idea of kind of what your direction statement is. You can see I've given you kind of a sample one. This is one that I currently use that before, as I'm preparing for the markets, this is something I'll say to myself a couple of times before I start actually trading. So you're more than welcome to kind of look through this and find out what works for you and then customize it. But this should be something that you should be fairly familiar in actually creating and writing. This very final portion, this just gives you some patterns, which we're going to talk more specifically about as it relates to trading, is what these different patterns are and how you can identify these. And then we can look for possible trade setups. But these are going to be some of our technical setups that we're going to discuss in some later training. But this just gives you a real quick bullet point of some of your trading plans and what you're looking for as it relates to that. So that is the trading plan. Okay, just a basic outline on how to fill that out. Again, make this personal to you. If there's certain indicators and things that you like and that you use, write that in there. I know some people like parabolic SARs, or some people are using MACD, or certain things they want to see on their charts as well. But it's important to have a real concise game plan so that when you are trading, that you do have the ability to have a set of rules and structures that you're going to follow as it relates to your trading. So we go ahead and I'm going to go ahead and stop